places.
So by the way, for Mary and Solange, I boiled our brainstormed list basically into 4 questions, starting with kind of what just happened and maybe a little bit of history, and then maybe Mary, I'll throw to you, and for all of us chime in as you see. Maybe then secondly, going into just a quick explanation of materiality that Larry, you offered in the email, and then kind of the landscape of what disclosure looks like right now. And then maybe over to kind of Solange, the board, kind of what you're hearing from a board view and how that might be the same or different than the stakeholder as well. And then let's go into maybe some conversation with everyone on how do these analytics teams participate? What is their role in this? Because I think that'll help them.
Yeah.
Is that okay?
I think we want to really address the issue of analytics and how that informs an organization's understanding, and also what, I guess, to contextualize what needs to be communicated or disclosed. That's what these guys care about and it's so critical.
This is going to be great.
Hi, Larry. Hi, Mary.
Yeah, and Mary, I loaded your slides as well, so I have them in line. I'll take care of all of the technical duties. Happy to do that.
Are you back on track, Mary, after your 1 a.m. call?
Ooh.
Yeah.
Oh wow.
It was a good call though.
Ichiwa.
Yes. It was actually what Kumbawa, right? Evening.
Oh yeah.
Painful. That's one thing it's very difficult to solve with technology. Time zones.
Yeah.
That is true. So Mary and Larry, are you up on the new legislation that's in the House on pay transparency?
No, I know it exists, but I'm not.
Yeah, I haven't spent a lot of time with it right now, Solange. So if you want to talk about that, that's great.
I don't know much about it. It's called the Paycheck Fairness Act.
Okay.
And I have a link to the bill, but I didn't really study the bill very much. And it's basically on the back of the I think it expands the Lilly Ledbetter Act or the Pay Fairness Act. I'm not quite sure which one, but it's already submitted. It's in the, what do they call it? The hopper, the docket, the hopper.
On the docket.
Solange, would you mind sharing the link?
Yes,
In the
I will
chat.
share it right now. And the link that I'm sharing is congress.gov. So you're right at the source, no filters in terms of good, bad.
Yeah.
What you might want to know also, I can't remember if you're familiar with this, but the controller of the state of California announced that the plans for a state level disclosure mandate. There's actually a sort of a nominal bill in the California legislature, which requires something on the order of 10 or 12 workplace related reporting on the basis of 10 or 12 workplace related metrics for companies of a sufficient size. So that's the part of the state level conversation. And
You know more about that, Larry, than I do.
Yeah, California already has this transparency, pay transparency for all state employees and all employees that are contracted to the state, you know, like service providers that have state contracts. You can go online and see anybody's salary, which is really kind of interesting.
Mhm.
It's, you know, full transparency. The other thing that happened,
I'll send that out to you, by the way, after the call.
cool.
Yeah.
Cindy Axney of Iowa or Ohio, I know one of those 4-letter states, introduced a total workforce compensation disclosure act last year.
Mhm.
And it just died in the Republican administration.
Mhm.
But maybe the time is right for that to be reintroduced. So many things going on.
Many things. Hi, everyone who's joining in. We're just watching folks come in and having some casual conversation, which you're welcome to join in on for the next few minutes. And in the chat, if you wouldn't mind just introducing yourself and maybe where you are in either the world or your organization or anything you're willing to share. It's good to see a lot of familiar faces and some new faces. Philip, it's good to see you. I hope everything is going well on the West Coast.
Yeah, likewise. Yeah, everything good.
Excellent.
Everything's good there too.
Awesome. Yeah. So I did the Clubhouse reference for you mostly.
Oh, very nice.
Have you been using it? Is it?
From time to time, if you catch a good conversation, it can be fascinating, but it's hard because you have to be there at the time. So if you miss it, you miss it.
You miss it. Interesting.
I'm going to ask an embarrassing question. My first embarrassing question, right? Because I rarely, if ever, used it. The chat. When I type something in, how do I submit it? That is, what do you click? You type in the message. How does it get submitted? It says
Enter. Enter.
Just on the keyboard.
Okay. Straightforward.
It's a good.
I'm antediluvian in this.
It's all the high tech. Don't worry. We all have trouble with high tech.
And
So side tech.
right.
SIGH.
And I want to acknowledge my students that are here. We're doing a virtual field trip
Oh, excellent.
from classroom to Zoom room.
Everyone stay together.
Yes. Follow the
Don't-
flag.
Don't forget your lunch.
Don't fall in the tide pool.
Right.
You're laughing, but I did that, of course.
Excellent. Welcome, everyone. Lots of good introductions going on. There's about 44 of us up, and maybe we'll start in a minute or two as well. There's enough information here that if folks are streaming in, that they will catch up or watch on stream. And I can already see that we have some highly knowledgeable folks in our audience as well, including Amy, on this particular topic as well. So welcome, Amy. So Stella, I think why don't we get started? That sound okay? So please do keep on introducing yourselves if you haven't already into chat, and we're gonna get going and start recording. Welcome. This is the March edition of the New York HR Analytics meetup, and while it is a very specific group, the New York designation really doesn't mean much anymore, right? At least for the past year, certainly it doesn't. My name is Jeremy Shapiro, and I get to lead a workforce analytics team for Merck & Co., the pharmaceutical company. We're joined today by co-hosts of Stella Lupashore, who is kind of one of my partners in crime and one of a few people that I think of as a super connector in the world of both HR and analytics as well, and also joined by Philip Arkol, who's part of our planning group too, representing some of our West Coast contingent as well. Tonight, at least in the West Coast or in the East Coast, and the afternoon and I can see a few mornings on the screen too. We're going to talk about some events that occurred late last year regarding the U.S. SEC, Securities and Exchange Commission, and a revision to their guidelines. There's actually a simplification of disclosure guidelines as well that are particularly critical for public companies, and has new language inserted in it that really is in our wheelhouse, which is the disclosure of human capital information to the investment community. So to start us off, we're gonna put up a couple of questions just to get to know you as a group, and then we're going to introduce our speakers, and we're going to share some content, and then have a conversation right afterwards. So we've got two questions up on the screen. One is what best describes you, and then perhaps where you are around the world too. So we'll let the activity commence.
It's not letting me answer, and I was going to pick the free food one.
As a co-host, we are denied certain things, including
free food.
Right, exactly. just like a different speaking engagement, you don't get to eat here either. So that's, I always feel that way during a.
Well, I always liked showing up at your meetups because you always had good food there. Yes,
much to Stella's wonderful taste, and the people who had been helping us and were the marvelous farm to table caterers are still doing very well during the pandemic as well, where they're delivering fresh made food as lunches and so forth, and doing some really great charitable work as well, which is really cool too. So we've got kind of at least a plurality, and it looks like we have we've got about roughly 30% analytics practitioners at public companies. We have we can end the polling here, and we could probably show it for everyone too. So just as a quick feel on who's here at the moment as people are streaming in. So we've got folks from public companies, private companies, HR professionals that maybe not in an analytics trade, and then at least one person that was looking for the free food. Your Grubhub order is on its way, as well, and primarily in North America as well. So welcome to all of you. And for those of you here for the first time, this group was created quite a few years ago to really help build community inside of the niche world of analytics, inside of human capital functions, inside of HR functions, the community around HR functions, and we range from specialists as data scientists to folks who are learning about this, and so this is hopefully our engine to help build this community and to spread knowledge around the world. So we're very glad that you're here. So today, I'd like to introduce our speakers and kind of outline our where we're going to go for the next the next hour and let's say 20 minutes to it. I'm going to share the screen really quickly. This will not be a share the screen and kind of dragging through decks overall, but this is actually a pretty meaty topic. So first, as some introductions as well, we're very pleased to have three distinguished panelists to come in and help describe and articulate what is a pretty complex topic as well. I call it diving into the deep end of the pool very quickly. So welcome to Dr. Solange Charas. So Solange, you're the CEO of your own startup, HCM Moneyball. You teach in a lot of your classes here right now, and you've also served as a CHRO. You've served on company boards, and also we have additional thanks for you in helping us to recruit our panel, as well as great idea.
Yes, I hope they'll forgive me in the future.
Exactly.
Mary Hartman Morris, welcome. So Mary is the an investment officer at CalSTRS, the California State Teachers Retirement System, and was also one of the co-founders of one of the key groups that worked with the SEC on the introduction of this language. And very, very happy to have you join us. And finally, Larry Bieferman, who is an independent consultant, but also works at the Harvard Law School on a work-life program that where you have authored multiple papers on this very topic as well in terms of current and future state. So welcome to everyone that's joined us. So one thing that we just wanted to make sure, this is an informal meetup and would almost never have a disclaimer. However, after you leave this Zoom meeting, you're going to want to act on some of the information that you hear here. And one thing that we wanted to make sure, I actually wanted to make sure that you heard is the right answer for your organization is actually working with your legal team and working with investor relations to solve the types of problems that we're talking about here right now. And this will make a lot more sense when we actually introduce a concept, for those who have not worked on it, of materiality later on. So we're going to talk about that in a moment too. So I'm just going to do one quick slide, and then I'm going to kind of move it to the to our team here. Actually, I'll do some of the SEC components. So we're going to answer 4 questions, or kind of look at 4 topics right now. And one is, what is this SEC guideline that now I've probably said more times and I've punched a ticket and get a free taco or something with it. The second is talking about materiality and kind of the nature of current external disclosure. Drilling in as well into kind of views from what are we hearing at the board level and within the sustainability community. And then finally, let's host a discussion amongst ourselves on the role of people analytics teams in the work that we're talking about right now. And just as a help, and I'll kind of leave this on the screen for a moment. For those of you who don't keep a copy of Regulation SK on your nightstand, it is a pretty thick document. Many people on the panel have read it. I have not read all of it, but certainly read at least section 101C, which is the section that we care about as well. And the key thing that what has gathered us here today is this statement too, in the without some of the additional discussion of the statement, that basically asks public companies, so this is because this is the Securities and Exchange Commission, you're talking about US publicly listed companies, that they have pointed out that they expect that anything that is material, that is material to an understanding of the registrant, that means the company's business, must be disclosed. Now we'll talk about it in a moment, because there's a dimension of this that basically what hasn't changed. Anything that was truly material, we had to disclose too. But this is now calling out human capital measures or objectives as a part of that consideration as well. This is actually the first time, at least from the SEC standpoint. There have been many other types of organizations, specific exchanges, the New York Stock Exchange and others, that have included language about listing like this. But the SEC hasn't added language like this until now. And what I was hoping is Mary, if I could ask you, and I'll kind of flip to some of your slides here, is how did we get here? So what's the story behind the insertion of this language through the Human Capital Management Coalition that you think might be helpful to the group?
Thanks, Jeremy. And thanks everybody for being here. And I'm really happy because I'm going to be learning from you as well. So my name is Mary Morris, and I work for the California State Teachers Retirement System, Jeremy said. I think many of you might know our pension fund is for teachers from pre-kindergarten to junior college. We're about $290 billion assets under management. You can go to the next slide.
Yeah.
So I'm here to talk from the perspective of the Human Capital Management Coalition, but also from CalSTR's perspective as well. So we're 35 funds with $6.6 trillion assets under management, and it's run by asset owners, but we also have asset managers in our group as well. So you can go to the next slide.
I'm getting there. Okay, there you go. Yeah.
Okay, and this is just a list of who we are today. So there's 35 of us. So you can take a quick look at who represents the Human Capital Management Coalition. And it's been a long run, since almost 8 years, 7 years, really, since we've been advocating for changes at the SEC. And so you can go to the next slide. So I thought it was important for us to just talk from, oops, excuse me. I thought I turned my phone off. Sorry about that. Sorry. Anyways, so this is information that all of you know, but from our perspective, this is how we define human capital management. And also the study and the need for human capital management, and also at the board level. So you can go to the next slide, please. So this is just to give a little bit of history behind all of us at the Human Capital Management Coalition and our advocacy at the SEC. So we started in 2013. In 2017, we sent a petition to the SEC asking for rulemaking. In 2019, and behind the scenes, of course, we were talking to the SEC, and the SEC's Investors Advisory Group also was asking and advocating for this as well. And then in August of 2019, of course, there was rulemaking proposal. And then, of course, in August of 2020, the final rules. And you can go to the next slide because we'll talk about metrics later. So it's really about, from our understanding and what we would like to hear and understand for the four metrics is, of course, it's universal, it's timeless, it's quantitative, it's reliable, consistent, clear, comparable, a point in time. And of course, we believe it's cost effective, and it's a proxy from our perspective of management quality. So, and it also puts things in context, right, for the company. So next slide, please. Okay, so here are the four metrics. And if you leave this today, we would like you to remember the four metrics. So the four metrics from what we are advocating for the SEC and what we're hoping, as you know, the rulemaking final rules came out with more of a principles base, and it's not mandated. It's what's material, like Jeremy mentioned, on human capital. But these are the four metrics. When we started our petition, there was 9 categories. And so this is just the 4, but we are really pushing for these 4 metrics. Workforce composition, full-time, part-time, contingent workers, whatever the company is using to accomplish its strategy, the total cost of the workforce, turnover, and of course, retention, and also the strategies to maintain or, and some companies, of course, there is some need for turnover. And of course, the diversity data. So you can go to the next slide. So why human capital management? We really do believe it's a driver of long-term value for shareholders. We know that from many studies and from even the 2 other individuals that are on the hall and being panelists, they have lots of different studies that will show this. It provides higher total shareholder return, return on assets, return on capital. So there's lots of profitability measures that help with the company's long-term value. We also believe, of course, all of this on training, development, health and safety, the dollars that companies put into their employees, which they believe, of course, is the most important asset. We all believe that is the most important asset of a company. And we do believe that it helps with, retaining employees, employee satisfaction. And then, of course, there's many studies out there, and some of the studies say that if it's more quant-based and provide more information, EPIC study is one example. There's lots of other studies that talk about specifically certain metrics do provide that long-term value, and also the return on what the EPIC study on inclusive capitalism was talking about the return on invested talent. Next slide. Okay, so the benefits of stronger human capital reporting, and this is where I'd like to hear from all of you as well. From our perspective, right, from asset owners and asset managers, it's a way for us to truly understand the drivers of value through their human capital management at the company level. We do believe it provides higher value, decision, useful information for our investments. We have investments, of course, we manage about $8 billion in my own group. But then within our external managers, we talk to them about it as well. And they use all this information. And if the company doesn't report it, they're going to use things like Glassdoor, right? And so it's better if companies are sharing that information and telling their own story. Of course, we believe that, in long term, it will reduce the cost to all participants. And we believe that the 4 metrics are the metrics that companies already utilize, report, and hopefully the board is managing as well. And then we do believe it creates long-term value. And of course, it's a utility for financial reporting to investors. Next slide. I'm not sure why that line is on the slides, but anyways.
I can, here, I'll see if I can clear that out there.
No, that's okay.
There you go. There we go. Sorry, there you go.
So I did want to take a few minutes because we all know, of course, that FASB, the Financial Accounting Standards Board, we were just on the call with SASB, Financial Accounting Standards Board, and of course, the SEC have a role in what is public companies provide in financial information. And we had a call recently with a FASB because they are out looking to investors, to companies, to academia to understand what is on their agenda and what they're planning to work through, but also to, I saw a comment about sometimes we don't necessarily understand or believe how responsive the FASB is, but the role of the SEC on Reg SK. So it does help, of course, with the quality of the financial statements. So I think that what we were pushing, and I think on this slide, was when we did talk to the FASB, we thought it was really important to understand workforce cost. And we thought it would be an idea that they could make it a footnote, a tabular footnote within the financials, explaining those 4 metrics, but specifically the workforce cost. And IASA 19, right, the IFRS already requires it. So it's, you can read this slide. I don't want to read it to you, but we believe that the role of the SEC, the role of FASB, CorpFin, all of that will help us as investors, help companies to be able to provide useful information to all users of the financial statements. So next slide. This is where I wanted to just talk, and there was, because the final rules of Reg SK was principles-based and not rules-based, are 4 metrics that we're asking for. And again, what Jeremy mentioned, of course, is that it is material information to the company. But for our perspective, we believe that material information is from the investor's perspective. And I think yesterday, acting chairman, SEC acting commissioner chairman, Allison Heron Lee, she did talk about these 4 metrics and the need for these 4 metrics. And she cites the human capital management. So this slide, though, we were looking at it, and I was using Equilar's tracking of human capital management disclosures. And so you can see here it is fragmented, and that link there will bring you to more recent filings. I saw that Merck was in there. I saw there was quite a few other recent filings of their 10Ks. So as you can see, workforce composition, some explain and some provide some of that information, some don't. It depends on, it's different information. Workforce costs, some provide quite a bit of information, others don't. Turnover and retention, we can see there's hardly any information on that. I think good examples, of course, as most people know, is Intel. They do a good job on their turnover and retention. Diversity. And diversity from the level of the pipeline of the company, senior level, but throughout the whole workforce. And so that can be described in different ways. Okay, I got to find more information from mission purpose-driven investors. So I'm not sure what you mean by mission-driven investors, because I think from our perspective, we are providing, we're looking for returns for our investments for our beneficiaries. So when you say mission-driven investors, I'm not quite sure, because I think every investor has a mission.
Yeah. Hey, Mary, I just posted that comment in the group now. I think for some people, they're very keen on certain features of the human capital composition of the company. So D&I, for example, would be part of the broader investment interest, and more information on diversity inclusion in the disclosures could potentially help them make more informed decisions. So perhaps that mission driven, not necessarily the business, but perhaps like from their selection criteria for diversity inclusion as part of their investment criteria. So that's all wanted to share there. Thank you very much.
Yeah, no, thank you. And I appreciate that because as investors too, we are asking companies, and many of my colleagues like the New York City Comptroller, they are asking for EEO1 data. I mean, we know that there's some issues with that, but it is a starting point. And I think next slide.
Oh, actually, so everything else was in your appendix. We go to your appendix.
Yeah. So we can talk, there's an appendix and it's okay, that's fine. You don't have to go through all the appendix, but I think if you go to the next couple of pages, there is some information and examples. And then I think if these are the ISO standards and what they're suggesting, and then the next page as well, you can go to the next one. Novartis has a little bit of examples. And so these are IAS 19, IFRS companies, but they do provide some really good information and I think good examples. I think that's it though, Jeremy, on the slides. If you go.
I think this is great. Thank you. Thank you. So let's pause here for a second. And if it's okay, Mary, I'm going to ask you let me stop sharing for a second here. Just to ask you a question. So from your seat, as when you review an organization's non-financials, so sometimes these are called extra financial measures for our audience too, and you're looking at these human capital measures, what do you learn from it? And obviously your mileage may vary depending on what it is, but I think the group might actually really value to hear, when I'm looking at some of this information, here's what we're thinking, here's what we're looking at, and the types of decisions that they can drive.
Yeah, that's fine, Jeremy. Thank you. And I have to say, and to disagree a little bit, because I do believe some of this information is financial, right?
Fair enough. Yeah. Well,
so
obviously the
like
costing is, yeah.
and it's really hard because I don't like that term non-financial, right?
Yeah,
so
yeah.
It's
why I used extra, but yes, right.
There you go.
Yeah.
So when I'm looking at it, right, so we have lots of different initiatives, right? And right now we have an initiative, we're engaging 50 global companies, and we're actually engaging them on the pandemic. And we call ourselves the Pandemic Resilient 50 because we're engaging 50 companies. There's large institutional investors, and we're having lots of meetings. And I think earlier on, if you were on the call, that's why I was having a call in Japan, right, at 1 a.m., right? Yeah. So, we are looking at all public information. And so when I'm looking at the Reg SK, right, and I'm looking at the 10K, I'm actually looking at understanding number of employees. And it's interesting where some, just very high level, because that's the only number required by the SEC, right? Mm-hmm. And so, but I'd like to understand, how many part-time, full-time, what is your business model of utilizing it? How are you using your supply chain, right? So if you're not using full-time workers, is your supply chain or is part of the contingent workers a part of that? And so diversity is a really important piece because we're understanding we have so many studies. So I think the way we approach it is there's so many studies out there that show that human capital management is going to help drive value for us as investors to companies. So really that's the bottom line. I don't want to spend too much time because I can go through everything. But the big piece though is that we do always bring this back to the board. So I'm very interested in hearing all the analytics from all the different companies and your roles and how you look at it. But I also want to understand, how do you push this up to the board? Because we're really pushing the board and talking to members. So that's what, when we're engaging these 50 companies, we are talking to the chairman of the board or the CEO, or, we are looking to talk to directors. And I think Solange will talk from the director's perspective. But it used to be 5 years ago, once a year. Oh yes, we talk about human capital once a year, right? And now our understanding is, do you have a committee that actually talks about human capital? Executive compensation, is it right? And we're not dictating. Is it right? Should it be in the compensation committee or should it be there a separate committee? But how much time? And I saw Amy Armitage was on the phone as well. I think that whole importance of pushing it to the board, understanding the board's role, but also understanding from the analytics side as far as HR, even having the right skill sets on the board, right? Of having a chief human resource officer on the board. We talk to members all the time and say, that's right, that, just like you're looking at cybersecurity, right? And you want someone with that. And then we also, of course, we still see companies that have 5 or 6 CEOs or ex-CEOs, right? Or, okay, that's good experience, good, but you need other expertise. And so we're always push on that. So I'll stop there.
Excellent. Thank you. That was as promised, the deep dive into a pretty complex pool. Thank you for the perspective and the view. And perhaps Larry, can we move to you for a second, or more than a second, and talk a little bit about this. We're going to back up to the fact that that public companies are being asked to disclose these material facts about an organization. And it might not be a very familiar term, because materiality is a term of art. It is also used differently in different contexts, both in the US and around the world. And I'll put up a visual aid, but I think at least our panel is certainly much more adept in that visual than any one chart could be. I have one definition up here, but there are many that we could choose from. So Larry, could you kind of give us at least a cursory tour through what the word materiality means in the context of this conversation here, is when we're being asked to disclose material information about human capital. How should we think about that?
Well, again, I think playing the lawyer's game, in principle, it's the legal definition of materiality insofar as it's been explicated. And you had another slide which had a version of it as related to the SEC. That is, the Supreme Court has interpreted the underlying statute, which authorizes regulations like SK. I mean, essentially, the concern is with the disclosure of information which both will inform and avoid misinforming, or worse, people who are buy and sell securities. And I'll read it slowly. This is a quote from the Supreme Court about actually 35 years ago, but this standard, the court has endorsed this standard multiple times. First, an omitted fact, because you're reporting facts, disclosures about facts, is material if there is a substantial likelihood that a reasonable shareholder would consider it important in deciding how to vote. That's the beginning of this paragraph in this lengthy Supreme Court opinion. Right? A substantial likelihood that a reasonable shareholder would consider it important in deciding how to vote.
Mm-hmm.
Then they got to the end of the paragraph. Okay. Quote. Hold on a second. Okay, that there must be a substantial likelihood that the disclosure of the omitted fact would have been viewed by the reasonable investor as having significantly altered the, quote, total mix of information made available. That's slightly legalese, and even within the same paragraph, a slightly different phrasing. Okay.
Mm-hmm.
Obviously, the connotation is it's something important enough to particular folks, and the reference is to for shareholders and then to investors, because you can obviously have bondholders as well, debt holders. A couple of things about that. It's interesting. It's disclosure with respect to something. Right? And there really is no, as far as I can tell, there's no definition of what that something is. That is, obviously it's concerned with financial outcomes, because nominally that's what investors are concerned with, but there's no definition of that. So I'm saying, going back to my scientist background, when I think of materiality, okay, I think of causation and links, and I say, okay, there's A and it's causally linked to a B with a certain level of significance, but I know what the B is. So the B is a little bit murky. One has to deal with that. But the other piece is, again, what's the standard of importance, if you will? And as I said, the touchstone is the reasonable investor and significantly alter the total mix of information. So that's what you have to work with. A footnote on that, and this is my hobby horse, so I apologize, because the term is a reasonable investor. And I've argued in the paper and other presentations that many investors, probably by definition, an investor is concerned about financial outcomes. However, all investors are not concerned only with financial outcomes. That is, some investors are concerned about both. And I would even argue that, but for a small fraction, probably all investors, even if it's to a de minimis degree, are concerned about other than financial returns. So one of the questions I have that hasn't been explored is, well, if it's a reasonable investor, the real investor wants to have this information, certainly from financial import, but what about the other import? I'll leave that hanging there, but that's lurking to me in the conversation. I'll leave it at that.
Thank you, Larry. And Solange, I know that you have a 7 o'clock deadline too, and I'd love to hear, kind of bring you into this as well to kind of get your view on, given this lay of the land, what are you hearing from a board perspective? What are you seeing from a disclosure perspective, and how are we doing in this effort?
Yeah, those are good questions. So you see this little slice here, that little slice is the board experience. And this little slice here is the CHRO experience. And this little slice here is the HR analytics. So my brain is like galloping all over the place. I love this subject. Don't hate me for it, but I do love this subject. And our audience, I think, if I'm not mistaken, you guys are all like me. You're all data wonks. You all want to understand how to quantify this, how to measure this, how to understand it, how to let the data, tell you a story. And that's what boards want, right? So first, let me deal with the universe of board directors who don't know what they don't know.
Okay.
Right? They don't even know that human capital is material. All they've dealt with is executive compensation, right? Succession planning at the top. They don't bother themselves with the dirty little part of human capital, right? And I think it is a big awakening that, number one, human capital is material. I mean, I think there are very few organizations where it wouldn't be material. Be a REIT, or where the proportion between asset under management and human capital, total cost of workforce, is really small.
Now entering court.
So we've got a universe of directors who are like, what is this, right? And why do I have to deal with it? And I love Mary's comment that, which we also talked about in the Brave New World report written by the conference board, is we make a recommendation for boards. One recommendation is get somebody on your board who was a chief human resources officer or who is savvy in human capital issues. If you don't want to do that and you want to just keep it a CEO club, then hire a consultant, which Dodd-Frank allows you to hire whatever consultant you need. And if you don't want to do that, then get trained, right? Have one of your board directors go out and learn how to be savvy about HR issues. So we've made this kind of recommendation that this issue, human capital management, actually get raised to an ESG issue. And I think that we're beginning to see movement there. So Mary showed you some disclosures of what we call disclosure forward organizations, who before even the SEC said, you got to tell us what material, human capital materiality, just said, this is the composition of our workforce. This is, what our turnover is. This is our total cost. Those are disclosure forward organizations. So we've got that issue. we have that when you listen to boards speak, which makes my brain hurt sometimes, especially as a data analytics person, when boards start talking about culture, it's like, WTF? How do you measure culture in your organization? What does that mean? As a data analytics person, I want something that I can operationalize. And culture is one of those things that is not a direct measured variable, that is a latent variable. How do I measure culture? Are people happy? Are they engaged? Are they staying with us? So when you hear board directors talk and they talk about culture is so important, again, it makes my brain hurt a little bit. If you'll allow me, and hopefully I can share my screen, I can. Yeah. Yay. I'm sharing just a page from the Brave New World report, which is basically the conference board's view on this sort of our context. Like, how do we actually understand how human capital as an ESG, environmental social governance issue, fits into a model? And the conference board sees it this way, that there's a universe around racial equity and justice. There's a universe around health and safety. And then there's the economic opportunity, safety, and equality, which is basically your operations. And we believe that human capital fits right in the intersection of that it informs the other three circles. And these are things that can be measured, right? Board diversity and effectiveness, all of these things in the intersection. You see, we use the word culture, engagement, and experiences. You can actually measure that, if not directly, but as a latent variable. And so we recommend to boards that they actually elevate these topics so that they can start talking about them, understanding them. But more importantly, and I'm going to stop sharing, more importantly, for us that's in this community, it's not enough just to give somebody descriptive analytics, right? And Mary, that's what you're talking about, is the descriptive analytics. How many people, what's the turnover? And that's great. But if you're a real data analytics person, you want that diagnostic and that predictive. You want to understand, oh, if I have great diversity, does that actually tie back to my financial performance? Or does that tie back to low attrition, right? So how do we actually connect the dots? And what I'm going to talk about now, and I'm going to let Stella chime in on this, is another study that we did with the conference board that actually looked at organizations that had dedicated human capital analytics functions. And what we found is when companies have dedicated human capital analytics functions, they outperform companies that don't by a lot, by like 270% on HCROI, return on investment in human capital, by 14% on profitability. And if that's not going to convince a board that they should use analytics, inform their HR decisions around analytics, and address the bigger issues around social justice, around philanthropy, around community, the 5 stakeholder capitalism tenets: community, employee, vendor, customer, and shareholder, then what is going to convince them? And that's why all of you guys in this room have such an important role. You play a critical role in creating that information that gets pulled to the board. And when I say pull, that's my aspiration, because we actually push stuff to the board, but we would love to see the boards actually say, what are the connections between diversity, between, designing jobs the right way, between designing your HR function or your organization around an employee-centric design systems thinking approach? Does it make a difference? And we want the boards to start thinking about this, because in the end, it impacts market capitalization. It impacts Mary Morris's decision to invest or not invest in your company, right? It impacts how well your employees do with their retirement plans. This is not just a trivial issue. And then the question comes, what do we do with the information internally? And then what do we report to the outside world?
Right.
And that's where you need your lawyer and your investor relations person and your CEO and your CFO. So you as a data analytics person, really, this is the way I think about it, it's like the golden ticket to Willy Wonka's chocolate factory, right? And you all have this golden ticket, and it's up to you to make those connections, not just understand the demographic data, but to understand the diagnostic data. And if you're, I know some of you in the room are very sophisticated, looking at predictive and prescriptive analytics and helping your organizations really understand how to optimize that return on investment, which Mary Morris is looking for.
That's right. And if I can just add to that, of course, we're really concerned about when you get the lawyers in the office. So picture too much, right? Because we do not want boilerplate language. So just that I just wanted to put in.
Yeah, but we don't want our HR people to get in trouble. We want air cover.
So Solange, thank you for that. One observation, by the way, particularly well taken on board and push versus pull too. And one thing that I've noticed from multiple organizations is that when done well, the push then becomes a pull. And that seems to be this is part of change management of the evolving nature of organizations, and maybe for all three of the board members too, because we're of our panels. As you think about the scope of what boards are looking at today, have you noticed a shift in the charters and or titling of compensation committees and other types of committees to help to include some of the factors that we're talking about today? Has that a trend that you've noticed?
I can start because we are asking boards to make some of those changes. And Disney, it is a very small change, but they did make a change that talked about their compensation committee will be reviewing and understanding the workforce composition cost, right? That piece of it. So I don't have the language right in front of me, but I can grab it. But so, that's our engagement piece of lots of different companies, trying to understand the role of the board and the value that this information is not only bringing to the board, but the overall strategy of the company, right? The long-term of the company.
Thank you. It's really helpful, and having lived through the change in charter, it really makes a very, very big difference in how the boards work and act too. Why don't we open up for a moment and start talking amongst ourselves? So maybe we'll go into kind of a more of a group mode here. So we've just laid out, the panel has just laid out a new a higher bar for disclosing information about our own people to the outside world. And what's been made clear is not only is the information in demand, which is one of the reasons that the SEC included this language, is demonstrated interest that there is material factors that investors would like to include, that like to consider as they're making investment decisions. Solange and Larry have helped us understand what this translation is, going from the gulf of internal information that we use to manage the company on a good day to information that is disclosed to the outside world. The question I think I have for all of us is, what is our role in what is the role of a people analytics team in determining the types of metrics that are going on? There are some amazing frameworks. Mary's framework, that your personal framework from the coalition, too, that you so nicely outlined, is a recommended framework. There are within the sustainability community, there is a side joke that's called, they call the entire community alphabet soup, the sustainability alphabet soup. There are many organizations. Sometimes it's confusing. I'm a recovering board member from SASB, And we would get confused on, okay, is this a GRI? Is this SASB? Is this something that's coming out of Sustainalytics or kind of some of the for-profit entities as well? So I guess maybe to start for the panel, do you have any thoughts on how analytics folks that are working inside of public companies or vendors that are advising these companies, where do you start to engage in these conversations internally? How do you get this going? And Solange, do you have a view? I knew you'd have a view. Oh, Larry might have a view too, but we're going to Solange in a moment, so we'll go to
Solange. You'll go first, please.
No, Larry, go ahead. I insist.
Well, it relates to something else I've said about this disclosure regime, and I always say it's the meta question: why are we having this conversation about disclosure? That's where the game is really, I think. Okay, but holding that aside, but I think the same applies here to some degree. That is that core, in a sense, for the people who are listening or participating. I think it is how did we, I'll put quotes around it, come to the conclusion that whatever we focus on is important, and why? What's the basis and how do we do it? Because in a way, that's the implicit conversation. Because in a way, what you're trying to do is re-examine. Okay, so the question is then whether, and it depends on where people are located in the organization. You may have the capacity to generate that is the role. I mean, to generate themselves. Yep. Otherwise, it seems to me, and I don't know how delicate that is within organizations, in effect is to put that to the people who are going to ask you to do the analytics. Mm-hmm. Because you say, we really want to do something meaningful, right? We have to understand why you thought that was important. Mm-hmm. Okay, all right. Because then maybe we can follow up and explore for you whether in fact, based on what we know or what we might explore, it really is important in light of X, Y, or Z. And that could be anything from what the other standards, particular standards might be point to. Yeah. We wrote that paper, which was available on our study of the essentially academic literature about materiality. All right, mm-hmm. Wealth of information out there. So I think that's, to me, that's the core question. Why are we focusing? Why have we focused on this? What's the basis for it, and how do we get there? That is, what's mm-hmm. the process involved? Mm-hmm. That will then shape, in a sense, the opportunities people have to go forward.
And Larry, do you recall a story, like anything specific on something that might help the team on that answer of why too? So a company that had both maybe a quantitative and maybe some part of their of the MD&A. So that's the management discussion section of a public disclosure of the annual report. But anything that comes to mind on this, we are disclosing this number because it has this type of impact to our business.
I don't have enough experience with company decision making.
No worries. Yeah. Yep.
Get off to an informative answer. I wish I could, but I can't.
No worries. I'll open it up to the panel. I suspect Solange.
Yeah, I might be able to give you an answer pretty soon. Okay. Not tonight. Okay. I have a team of 13 interns working on reviewing all the filings that have been made since November 9th, which is the day that the SEC, Mary is so excited. And right now we're just scraping data. I got them all excited because the number of filings from November 9th until about the beginning of February was about 400. Mm-hmm. And now I made them look again. And since the middle of February until the 10th of March, another 2,000 filings had the keyword human capital in it. And so all of a sudden they felt like they were just coming up for air, having looked at the 400, and phew, they got hit by the tsunami. So we're selectively looking at—
You're looking to see. Okay.
Yeah, we're looking to see what's being disclosed. And then we're going to obviously publish something around the prevalence, like mm-hmm, what data mm-hmm. has been. And if you remember the Venn diagram, we're looking at those categories.
Okay.
So we're looking not just at how many employees do you have in the diversity, but we're looking to see whether or not organizations are actually talking about those
Mhm.
categories in the Venn
Mhm.
diagram. And then, of course, we're going to take the next step and say, is there a relationship? Is there a correlation between how much companies disclose
Mhm.
and how well they're doing? And we're going to
Mhm.
follow this for, we're going to do a longitudinal study. It's hard to see in the first quarter reporting, but we want to give interested parties some information. And I know we're not the only ones that are doing it. I think Catalyst is doing a project. Mary,
Good.
is the HCMC doing anything looking at data? I mean, Harvard already did a preview. So we're not the only ones looking at it, but I'm hoping that we're the only ones looking at it through that conference board model lens, and also really doing some diagnostic analytics to see if we can find connections between things, right? Because that's what makes the world interesting is, and we'll never know whether or not it's causal, but maybe a correlational, relationship is good enough right now. I mean, Mary, would it be good enough for you to invest in a company?
Well, I think that there are lots of different studies that do show some of that, not necessarily, the completeness of it, but so I would like to, one, advocate if you could make sure you do our 4 metrics, maybe possibly as well.
Yes.
Use those words. But I also, I think that it is important that, I point out that we're not just asking for these metrics just in metrics, right? We do want that qualitative
narrative.
What is that value? We're talking to a lot of, because the companies that were impacted heavily by the COVID-19, we're talking to a lot of apparel companies, right? And understanding that role of, all their workers, whether it be for their wholesale business or their retail business, how many employees are they furloughing, how many they're keeping, it's all that big story, right? And without those numbers, it's really hard for us to understand
how the business works.
Yep, exactly. I mean, how the board is thinking about how they're going to move forward, right? How they're going to become more resilient, how they're going to pivot.
So Solange, I know we're going to lose you in a moment. Any closing thought? We have until 7:30 for everyone, but
Dennis Alvarado, who is my associate in the class, actually surveyed my students, and they all want to stay. So if you would like me, I will stay.
Absolutely welcome.
Until the bitter
Thank you,
end,
Dennis.
because we have their consent to stay. Otherwise,
excellent.
If they would have said we want to lecture, I would have left you. But if my students are engaged and listening, we'll extend the field trip.
Excellent, and let it be known that Solange's class is democratic as well. So we have in that. So on this top, so this we'll just hang here just for one moment, and then we're going to go to questions too. Is what we've just discussed here is our disclosure of broad metrics to understand the operation of the organization. And I do wonder, so I when I asked the question about a specific, I had one in mind just in case too. So I'm going to describe something that was pre-pandemic and from a few years ago. And I'd like to get kind of your reaction of the specific types of disclosure that a public company should have been doing all along. And maybe was and maybe not, because I suspect that root cause analyses of analytics companies or analytics organizations can help with this. So if we think about the company Chipotle, before the supply chain material issues, which of course might not have been really covered in their MD&A, years before that, they would standardly have in their language a disclosure about recruiting. And I found this to be fascinating in itself, that they basically disclosed that if they could not recruit qualified cooks, essentially folks making the food at sufficient quantities given their opening schedule, that they found it to be a material disclosure to tell investors that they would not be able to make their financial numbers if they're recruiting at these levels. And it was more quantitative over time. We're able to hit some numbers too. So how do you react to something like that? So that's a very specific type of human capital quantitative disclosure in itself. As our teams think about disclosure here, is it the broad strokes that we find valuable? is it worth the analytics team's time to really bring issues to light and create options for other types of either operational risk or benefit? I mean, that's the one thing that I like to think about, particularly as we have these conversations. It's not just what are the risks, but what is the upside too. So any reactions to the kind of specific versus broad types of information?
And I think from the investor's perspective, because we've talked to Chipotle a lot, and it is important for us to understand. So again, it's how much information do you need? How much do you want? But I think it is important because it's part of their strategy, right? And it is a big risk, right? I mean, so from our perspective, if they can't get the workers in there to do what they're going to sell their product, then there is a big risk, right? So, and it does impact the ability for the company to move forward.
Got it. Thank you. Thank you. Any other comments there before we'll move on to some questions from the audience, and then a panel. If you have questions for this team too, please. This is even better. Let's make it. We'll go in both directions.
I'd love to hear what Larry has to say about this.
Well, just a couple of points. I think just to go back, as I said, if you will, there's what linkages there hasn't been a definition in the sense of the character of the linkages that people want or are necessary. The study, the so-called materiality study that we did a bunch of years ago, again, we only looked of the thousands of papers linking one or another workplace policy or practice to an outcome for a company, which could be the level of retention, some measure of productivity, what have you. We only looked at outcomes that investors normally cared about, financial outcomes, okay, which sharply reduced the number, okay. All I'm saying is there's no question from that literature that at some meaningful level, there's the link between those policies and practices and financial performance. The devil's in the details. That is, even that literature is problematic because it's mainly focused it's not, rarely if ever focused on causation, number one. Two, they have correlations. The levels of significance vary, depends on what your judgments about that. That's part of the conversation, but what you want to consider material. And a complicating factor, and I hate to complicate factors, but and again, it depends on what you're looking for. In the phrasing, I think Solange is much more familiar than I have. The literature seemed pretty clear that at least if you're talking about financial outcomes, right, the focus should not be on any particular metric, generally speaking, but on so-called bundles of metrics, clusters of policies and practices that are synergetic, if you will, that produce the outcome. And it's kind of interesting. I was reading one of the interviews that David Green did with a person at doing this kind of work at Prudential. Okay. And he was describing how, as part of their analytics work, they were collecting information from workers at Prudential about, in effect, my phrase, their capabilities. I prefer human capabilities to human capital, another conversation, right? But they were canvassing, that is, what they could do, and they canvassed not only their formal credential or experience, but what they did in their part-time, what they did in their personal lives, because of skills and what have you. Okay, but that information, right, was collected to the potential for mobility within the company, which in turn was linked to what kind of policies they had for mobility, and what means and resources did they make available to people to take advantage so they can enjoy that mobility. So in other words, there's a complex of factors that really make a difference. It was not only one element. So I think that's lurking in. Part of that, I think, is related to the narrative material that you provide. I personally don't believe, except in a rare circumstance, maybe the hiring of workers at Chipotle, but bare numbers don't do it. I think in the real world. So one of the challenges, I think, is how can you marry meaningful numbers with a narrative that really illuminates their significance
and tells their story. Tells their story. Thank you, Larry. That's helpful.
There was a study, I'm sorry, just really quick.
Please.
There was a study, EPIC, right? The Embankment Project for Inclusive Capitalism. And so it's sort of what explaining a little bit what Larry's was discussing, was that it talked about the metrics though, but then it did say that, you know, with the qualitative data, it did add more value. But it said that companies who use just qualitative information and not metrics, there was an issue of those returns at those companies. So, you know, maybe I can just, you know, I think that's in the deck as well.
I wonder if there's a reverse causality problem there or issue there. We've kind of found something like this. The most recent study, which is among the packet, which was we used data that Robeco Sam, this investment advisory firm, and part of a big asset manager, and they run this annual extensive survey, hundreds and hundreds of questions, okay, to enable companies potentially to qualify for the Dow Jones Sustainability Index. Yep. And we looked at those disclosures were private, right? And we looked at those disclosures. We got access to the data. We could look at what they disclosed through Robeco Sam, and then could compare it with what they publicly disclosed. Right? Surprise, perhaps, that the companies that are reported publicly and privately, the ones that reported to Robeco Sam, right, were more likely to do it publicly. Why? Because they wanted to qualify for the sustainability index, therefore they had to look good. Therefore, it was much more likely that they were going to be publicly disclosed. Okay.
You've got bias. You've got self-selected bias.
To some degree, you can play games with the narrative. That's the weakness of qualitative. But if sometimes numbers are gotcha. So the reason, arguably, you could argue the reason why people, the companies perform worse who give only qualitative data is because they've got something that they're not happy to talk about. And that's why it's directly linked to performance as such.
Thank you, Larry. Thank you for parts of this. As we move through this conversation, we're getting some really great questions in, and I'm going to scroll back to one from our good friend Nigel Diaz, who's calling in from London, as well as part of the Midnight Club in here too. And so one question from London is this type of disclosure potentially useful to understand valuation, so both undervaluation or overvaluation in a stock as well? Anyone have a view on that?
I can't address the public company side, but I can tell you with the due diligence that I do for M&A, it absolutely drives valuation. And the M&A community, like, you know, Einstein said, they do the same thing over and over again and expect a different result. They are very slow to understand human capital impact. And they go just as far to understand the top management team by doing interviews and, you know, psychological profiles, but they don't dig into the HR data at all. And it's mostly because the people that are doing the due diligence are financial people, and this HR stuff is like, you know, Martian speak. But if they, you know, if they even just look at Mary Morris's 4 or the HCMC's 4 metrics, they can gain a lot of understanding about the sustainability of the workforce to deliver those pro forma projections, which is the basis for understanding enterprise value. And when you disrupt that assumption, you change deal value. So for any of you guys out there that are doing M&A work, you can't ignore the HR part. You can't just say, oh, this is my employee demographic, full stop. Or check the box. This is how much I'm paying for comp and for benefits. Yeah, that foots with payroll, full stop. You don't know anything. Nothing from nothing. I call it understanding the quality of employees, Q of EE, while you're actually looking at Q of E, quality of earnings. I don't know what the world is like for the public, you know, public companies.
Well, I think you can even tie it to like when you think about climate change, right? And evaluation and how companies should be valuing the impacts of climate change as a contingent liability, right? And looking at so there's some good reasons for accounting changes, and you know we could jump into intangibles and capitalizing assets, but that would be another 3-hour topic, right? So it
Another
is about-
event.
yeah, exactly. The valuation is there. It is important.
And, just to punctuate that, the S&P 500, the Oceana analysis on the S&P 500, which is in the Brave New World report, identifies that 90% of a company's market valuation is intangible.
Yep.
And if you're not capturing HR, what are you capturing?
Mhm.
I mean, it's a total head scratcher.
And that number has just increased over time. That percentage,
Yes.
that ratio has gotten higher and higher.
Exactly. I'm, you guys have heard me, some of you guys have heard me talk about this, but I'm dying to see what the accounting community does with accounting for, because what we're talking about is income statement stuff.
Yep,
But I'm
exactly.
dying to see what the accounting community is going to do around human capital as a balance sheet item. And, I'm like the dog waiting for somebody to throw me the bone. It's like, what am I going to do? What am I going to do?
And we are prompting, right, the FASB, and we did talk to him a little bit, but that's a huge conversation, right? So,
That is a huge conversation.
but
And
it is important.
a slippery slope one too.
Yeah.
Like how do you, it's Solomonic, like how do you cut the baby?
Yeah.
Larry.
So go ahead, Larry. Yeah.
Just I said I'm going to be ornery again, and I apologize. Again, it's a world. The accounting world is something I'm not tutored in. But my instinct is, I would say, don't go there. But be very careful about going there. That is, I know I can appreciate the instinct to translate the discourse with regard to human beings who work in enterprises, whether you're under the rubric of human capital, within the a rhetorical or linguistic framework of accounting, but I don't think it works in the long run. And I think probably the better way to go, is a parallel structure.
Mm-hmm.
It doesn't fit within, I think, ultimately, existing framework, and to, as I phrase it, shoehorn it in that way, I don't think it ultimately is very useful. You'll end up with misleading conclusions. Better to, and it's not easy, come up with a, if you will, parallel narrative. It can have its metrics, but it has to be framed differently. But that may be idiosyncratic.
Well, that's why I say leave it to the accountants to figure that out.
Well, and some people get offended, right? Because they think it's, you're treating individuals, right, as something that, it is an asset, but it's the way we talk about human capital.
Stella's favorite topic, dehumanizing.
There you go. Stella, maybe you have a little bit to say, Stella.
Larry, go ahead.
A footnote, because I had, when I was writing up some remarks, I said, and again, these are my idiosyncrasies. For me, I'd rather talk about human capital, human capabilities than human capital. And even with regard to metric, because it's a mindset. And I think the mindset is quite important. Even to what your everyday decision making with regard to what you look at and why. Similarly, I'd say there's a distinction between characterizing a metric in terms of training as opposed to metric characterized as learning. Learning is what human beings do. Training, someone is trained at the object of action. If you want to talk about mobility rather than turnover or retention, it's a very different orientation. And I think missing in a lot of conversations is voice. It's hidden behind, to some degree,
Culture.
It's hidden by culture. It's hidden to some degree by satisfaction. But I think that's a very important missing part of the discourse, and that's even more readily excluded under the kind of the human capital kind of lingo. And I'm a person who thinks the language you use is very, very, very important.
Very important.
It has a profound shape. And I think, because I think that's going to go back in a sense to what people on this call ultimately do. But that's what I said before. Why did we decide on that metric, the basis for it and the process? Because it raises the question about, well, what do we think is really important and why? Easy question. not easy to talk about, but in a way, this is an opportunity, an opening for perhaps more serious-minded reflection on that, because then ultimately, both for the people who are doing the work, the analytics people, the work is more meaningful. I'll leave it at that.
Yeah, and I just want to do a shout out to our friend Neri Buckspan at Ernst & Young, who says, this is not a disclosure issue. This is a business issue.
Mhm.
And if you stop, fretting about what am I disclosing, and you start thinking about how do I align and deploy my human capital appropriately and effectively to achieve our business goals, our community goals, right? Our employee goals, then everything will turn out okay, right? Stop focusing on the ends and start focusing on the means.
Mm-hmm.
It's the process. It's the way that you think about, and to my class, listen to these words because you're going to hear them next week. The supply chain approach to understanding human capital, right? And I don't want to sound like I'm dehumanizing human capital, but when you're deploying people appropriately and effectively, they're happy too, right? You give them the opportunity for personal growth, for professional growth, for intrinsic satisfaction. It's not just a machine. It's, looking at how to enhance people and your organization as you're doing it.
Yep.
And, I would suspect, and Mary, don't let me put words in your mouth, that that's part of what you're looking at is the sustainability of the human capital. And you see that when people are sticky and they're productive and they're engaged. That's a nice place to be.
That word, right, sustainability, right, or being sustainable. I mean, that's what my group is called now. We're sustainable investment and stewardship strategies, right? It is all about how does a company maintain and its existence, one, a going concern, and then also how do they make sure that they're sustainable, their business.
Mm-hmm. Thank you. So there's so many things, so many ways we can go there. And so Solange, like when you talk about supply chain, what comes to mind immediately in our world is the service profit chain, too, out of Harvard from years ago. I can't think of a more empathetic and profit driven a piece of work than thinking about how employees are treated and how they operate, and the direct impact on customer satisfaction, the direct impact on profitability and growth and sustainability of a company. Too, one of the most fascinating stories is the fact that one of the co-authors went and ran a company and actually put it to the test as well at Harrah's Entertainment. So let's move to any questions live, either from our listeners to the panel, or from the panel to anyone who's participating. So the floor is open there. You can unmute yourself. As I think, Stella, can we unmute ourselves? Okay, so you're free to unmute, and thanking you in advance for not unmuting earlier on, which could have been much noisier.
Jeremy, I'd like to ask a question. I'd like to have us talk a little bit more about the upside of enhanced transparency and disclosure. We've talked a lot about, the legal side of it, but in particular, given the wave of sustainability investing and what's happened with the pandemic, and there's a sea change happening right now as it relates to disclosure and transparency. So I would argue that there's a huge competitive advantage to those companies who get there first, who have a full story about how they're managing their people, who have not only these key indicators, but also the performance narrative behind it. And they get that story out to all of their stakeholders, because that will engage their stakeholders in the common effort to execute the business strategy. So again, I'm a little bit on a soapbox here, as you may know, but let's talk a little bit more about the opportunity and that upside. Yeah.
That's a great point.
So Amy, that's exactly why we have this initiative we're calling the Pandemic Resilient 50, right?
Yeah.
We're engaging boards and understanding, how did the pandemic impact the company? How are they pivoting? What is their risk management, their contingency planning? Is this really a black swan? Is it, a gray swan? How are you going to be long-term become, and what are the metrics that you as a board are looking at? And specifically, of course, on some of the trends and the issues about how COVID made human capital management even more important.
Thank you. More questions? I'm scanning the chat as well. Too.
I have a question because there's a lot of there's a lot of individuals from different groups, right? So I'd like to hear, because even when I'm looking right at the 10Ks and how people explain things, I even looked at Merck's, and I was looking at all the different companies, and I'm just trying to figure out who's going to be on the call. But I'd like to hear from perspectives of people who have released their 10K. How did they look at what was material and with guidance of the SEC, right? And when they said your human capital. So I think you're going to find human capital management almost in every 10K per se, or at least some of those wording. But how do anybody on this call, what was the discussions and how you looked at, and of course, hopefully we're wishing that you would disclose those 4 metrics.
Right. And you talk about in the latest round.
What's required in the business
now, right? So that would be
from November on, what Solange is going to be studying.
Is there anyone on the line that's gone through so we're talking about in the current season too. So this is kind of work that is kind of currently being released.
And maybe at their company. Just the discussions. I don't take proprietary information.
Oh, of course, no solicitation, to be clear, of internal information too. And so, one thing that I'll share in terms of this is actually where relationships become really important internally as well, and again, that the push then becomes a pull in some ways too, is having a strong relationship with the investor relations team and with the sustainability teams, corporate responsibility or sustainability teams for these human capital analytics functions becomes lifeblood too. So as more organizations are adding both sustainability goals and human capital goals to internal scorecards, which then translate to board-facing metrics, but then translate to the outside world too. It really is this the connectivity between these groups that seems to be one of the most critical paths to success, where you can get to a sharper result. You can have really good conversations with executives on this as well. So building the case both internally does take education too. And so where the analyst can come and say, well, here's what we're seeing. How does this fit into what you're hearing? So Mary, for full disclosure, we love to know what you're asking our investor relations folks on the other side of the phone call too, and really understand where are we going and what people are seeing and hearing too, because that helps tune our ears from an analytics standpoint on what's next and what might be coming down the pike.
Yeah.
Too. Any other color from someone? Too. Oh, wait a moment too. Well, excellent. Thank you for that.
So I can respond a little bit to
you,
Jeremy, what you asked about what IR is, or especially when we're talking to the board as well. I think that it is interesting because sometimes we do get that it is proprietary information, understanding, and so even when we talked to a company recently, we were talking about the supply chain, and then we said, some groups like the Business Human Resource Rights Center that we work with, different groups that try to look at human rights and the issues of human capital around the world, right? Some believe that even supply chain and vendors that they use is proprietary information. So, if you think about some of the apparel wear that maybe is at the high end and, their fashions, but I don't know that is really the case because, so it's a pushback information, right? I mean, about 12 years ago, 15, 20 years ago, corporate governance issues, that was proprietary information. Companies didn't put some of that information on their website, right? So anyways, I just, I'm hoping that, the conversation will continue, right? We'll just keep evolving.
Yep. Yeah, on that note, and maybe this is one of the thoughts that we can close with too, is as change occurs, the change management is important. And I remember someone sharing the story that when in the early part of this corporate disclosure in the 1900s, the universal mantra was, it is impossible for us to disclose financial information. It's too difficult. It's too burdensome, and it's impossible to get. And so as we move through the decades of maturity, the statement was consistent, but the topic changed. Too, and we're building and we're building and we're building to it as well. So we're almost at time, and I just like to say thank you, Mary, thank you, Solange, thank you, Larry, for a really stimulating conversation, and I can see the same through the chat as well. In this is I think within 90 minutes we took a complicated topic and really shed some light on it for everyone.
And
too.
made it more complicated.
Well, we're going to try. Like this is hard, and it's change. So we will stay on the line. A few of us will, for anyone that wants to catch up and get to see friends they haven't seen in a little while. If you would like to continue this conversation as well, we do have a Slack channel, and you're welcome to. We'll post that up into the chat, and you're welcome, of course, to both have continue this conversation. There is a channel for jobs for people who are both hiring and for those that are seeking new opportunities as well. Please do join us there, and we look forward to seeing you at the next event. So thanks so much, and for everyone, have either a good night or for a good morning. To take care of everyone.
Thank you for the invitation. Thank you. Bye-bye.
Thank you.
I see, Stella, you posted the link. Thank you very much.